We were a little surprised, I have to say, at first blush when we looked at the results of our investor confidence survey. And that's a survey we do every year. We like to look at the trend information over time. I think if you bear in mind that the survey was out in the market, it was being sort of tested with people at a period where the New Zealand and global markets had bounced back from a pretty catastrophic and sharp drop. And we're actually well on the way back towards the highs they've been at before COVID. So I think in New Zealand, the response to COVID probably was going well compared to the rest of the world. And so there was a sense of optimism, I think, that maybe the worst was over.
2/3 of people saying KiwiSavers for the long term. Although some people switched their funds from growth funds into conservative.
Certainly we weren't surprised by a certain amount of switching, particularly switching from growth funds, which would have been hit quite hard by the market volatility, into conservative funds. Not as much as we might have feared, but we certainly saw some. And we saw some people switch multiple times, which is not a good thing, in my opinion. And yeah, the survey tells us that people feel regulation is doing what it should do. I think it creates an underlying, sometimes slightly nameless, just sense of confidence that someone is looking somewhere and will make providers do what they're supposed to do. We've pushed providers very hard to try and engage with people. This is the first time actually we've seen significant engagement with the KiwiSaver providers and the supervisors. We've seen significant uptick in retail trading, which we may come back to because I'm not 100% convinced that's a great thing. We have seen greater interest in particularly equity markets, and that's been matched, as you know, Barry, in Australia, in the US, and the UK. In fact, pretty much every jurisdiction we've spoken to is seeing a surge in retail interest in direct equity market investing, which is and fund investing, low cost fund investing.
And we do annual surveys, as you know, and then people have been showing increasing interest in that. Do you see that public interest in sustainability, in responsible investing or ethical investing, green issues playing out more over time? Is that something that you see? It's obviously not necessarily a question in the recent survey.
We saw in New Zealand an early iteration of that when there was some media debate about cluster munitions and whether KiwiSavers and the funds that KiwiSaver funds invest in were invested in, you know, so-called sin stocks and the rest of it. But I think that issue around sustainable investing, socially responsible investing, ethical investing, whatever you want to call those various categories, is the single biggest growth area, certainly in fund management right now. So that people are often more interested in that than they are in relatively minor fee differentials between providers. Now, obviously, fees over a 25 to 40 year investment add up to a significant amount of money. So we want people to focus on that. Yeah, this is going to be one of the biggest components of fund management going forward. And in fact, you know, all investment, the sustainability of it, whether that's the risk to the investment of climate change or whether it's the risk posed by that investment to climate change, you know, going to be huge issues.
Yeah. Can you talk a little bit about some of the issues relating to conduct? I know that there's a lot of interest in the inquiry and what may come out of it.
When the wage subsidy drops off, you know, a lot of banks and insurers are going to have to think quite hard about how they help their customers through that, because I think that will be difficult. So that's the kind of conduct mandate we already have in fund management and retail derivatives and a few other areas, which we're now being asked to take into banks and insurers.
The issue of disclosure, I think, is so closely aligned with misleading claims, because at the moment, part of the difficulty is there aren't comparable metrics on what people mean by ethical or sustainable. And I think if we're able to have more comparable reporting in the same way that we now do on financial metrics, on other things, then it starts to give the public a clearer and more objective set of measures. And in a way, mindful money is to some extent trying to fill in some of those gaps, because there aren't ways for the public to be able to necessarily do all the research that they would have to do.
Yeah.
Talking about, can you expand any on, I know it's in your future plans, but on FMA's role in monitoring and perhaps enforcing mandatory climate change disclosure?
New Zealand's typical challenge, do we want to be the leaders and therefore risk spending a lot of time having to backtrack, or do we want to let the Brits, for instance, who are quite advanced in this, and the Europeans who are looking at it, create standards that at least would be applied across Europe, which would make more sense to us to take, rather than end up with some New Zealand specific standards that only apply in New Zealand. So I think that debate is still to land. All of those complex questions that people don't want to deal with because we've built the whole model on something else. Probably we need to answer some of those big questions in order to move more quickly on the sorts of stakeholders that you're interested in and we've been talking about. Because I think too often you're going to hear someone say, but the law says X and Y, and you're telling me it should be X and Y and Z. Is that a moral impost, or are you saying there's a legal duty? And I have a little bit of sympathy for some of the directors I've been badgering that it's easy to point to what investors want. It's not so easy to point to the provisions in the law that tell the director they should take that into account when they make big decisions for the company. So I do think it's a challenging topic, but the structure of that system is, in my view, badly outdated.